trading. I do this for a living, and I've been doing it for 30 years. And now I'm going to show you guys how you can actually trade for a living, how you can actually become a profitable trader in the stock market, trading Forex, trading futures, trading commodities, trading indexes, whatever you want to trade. You can become a profitable trader, or at least a break-even trader, by understanding one or two simple strategies that I use in the market, one or two easy things that you can do to make yourself into a profitable, good trader. It's not difficult. I've been trading for a living. Many people trade for a living. It's just a question of understanding the markets and understanding how it works. One of the first things you've got to understand is that trading is a 50-50 game, and we'll get to that after we've been to the charts. We'll discuss that after we've been to the charts, because so many people just simply don't agree with me that trading is a 50-50 game. Most of you believe that you have to have an edge and you have to be better than the next person, and so on and so on. I've heard it all before. But the sooner you understand that it's a 50-50 game, the sooner that you understand that you need to take losses, the sooner that you understand that it's all in the mind, that it's a psychological trick, the sooner you'll understand how to become profitable. There isn't a strategy out there that's useless. There isn't a strategy out there that doesn't work, or a system. All the systems work. All the little squiggly lines work. All the little chart ideas actually do work. But how you apply them, that's what doesn't work. And guess who's at fault for not applying it correctly? That would be you and no one else. That would be you that's applying your system incorrectly and failing to make a profit on your system. I'm going to show you a system that I use today, price action, which doesn't require indicators, which doesn't require all the rubbish that goes in there and all the lagging indicators and that sort of thing. A system that you can use that will make you profitable. But you have to understand when you use the system that when you actually use this system, you have to apply the psychology to it as well. You have to apply yourself to make it a successful trading system for you, so to make it work and to make you profitable at the end of the day. Guys, drop down to the description. I got a free Forex book for you there. Grab it, totally free. It's a PDF. Go and enjoy it. Go and have some fun with it. But while we're here, before we go to the charts, just remember trading is risky. Trading is very, very risky. And if you don't like risk, you most probably shouldn't be trading. Guys, if you remember, or if you've joined the membership area, and you'll know that you get the free video every day, which is the trade of the day, and we go over that every morning. And we also have the list of trades for you guys as to where I think the market might be going. Just my idea. So if you're not a member yet, give yourself a chance and join the membership and get in there, guys, and figure it all out. We're doing the Funded Trader Challenge on the live shows during the week. Don't forget to come back for those. Those are a little bit of fun. Funded trader markets. If you want to get funded and you want a real good discount, just drop down and get the link in the description below as well. So let's go to the charts and let's go and have a look at how or what system you can use without indicators that'll make you a profitable trader at the end of the day. Trading for a living is all about understanding how to place your trades. So the basis of this is actually pretty simple. What are we on here? Aussie dollar, US dollar. This is a short trade. The basis of your trading should be pretty simple, and that is place your stop loss, make sure you've got your risk in place, place your profit, make sure your profit is more than your stop loss, much more if you can, perhaps double if you can, not always the case, and try and keep your stop losses the same throughout all your trades, which I kind of haven't really done very well here, but less than $1,000 is my business plan for a stop loss. More than 2,000 would be perfect for a win, but sometimes I will take a smaller trade because that's the trade that's available to me on any particular day. Now this particular trade, you've got your stop loss down here, but now if it goes back, I've paid $588 for this trade, and then you take the loss. If it goes into profit, I will move the stop loss into a profit or a break even, and then the trade costs me nothing. For example, this DAX, we went short on the DAX with a view to it making us $2,639.17, which we would have moved down if the price got down here. We went into profit, which is great. We're $722 in profit, and most of you would say take the profit, get out now. But here's the problem, guys. It has hit this support and it does look like like it might actually bounce and go back up. And that said, any normal person would say take the profit and run. What I've done is I've moved my stop loss down, which was up here at $1,000, and I've moved it down to $500 in profit. This way, not only has the trade cost me nothing, if it stops out, I've made $518. So I'm not unhappy with that at all. But if it continues on down, I stand a chance to make $2,639. Do you see that? So the point is I'm risking about $200 here for the opportunity to make $2,000. So that's the point. Now, either way I make a profit, either way I walk home to the bank happy for the weekend. But the point being, I'm trying to make as much profit as possible. If it breaks through this support and carries on down, at this point we're going to add to the trade, perhaps even double the trade and go for the 4,000. So if it breaks through here, that's actually an amazing thing to happen, because that's going to make us serious money. The Nikkei is in a loss, and this is why I say, you see, you've got your loss here, you've got your profit here. If it breaks back through here, takes out the loss, then we make the loss. I've got a little bit more loss on this particular one because when I initially took the trade, I actually put the stop loss in the wrong place. But I did not move the stop loss because the price was moving. I moved the stop loss almost immediately after I took the trade, noting that the stop loss was just in the completely the wrong place. And that has actually forced me to add $273 to the trade. But let's be perfectly honest, guys. No rule is solid. No rule is perfect. What you want to be doing is staying as close to your business plan as possible. I will not move the stop loss another millimeter. This is my stop loss. If it hits this and takes this out, that money's gone. I've paid that amount of money for the trade. What I'm hoping for is that it will start to move in my favor and I can move the stop loss down to at least break even. And then this trade will actually cost me absolutely nothing. But if it takes out my stop loss, that's what the trade has cost us. The US dollar, Japanese yen, we took this trade and look, it's suddenly moved against us. It wasn't a bit of profit earlier, but it's now suddenly moved against us. But now you can see the perfect trade. $921 stop loss. So it's close enough to the 1,000. That's what we're looking at. That's what we're paying for the trade. It's beyond the resistance. You see I've put it beyond the resistance level. And there's your take profit level down here at the 2,000. Now believe me, guys, if that price gets down to here, I'm not just going to let it take out this profit. I'll be moving that profit away down, and then I'll be following the profit down. I won't be just letting it take out my profit, and the stop loss will be down here in profit as well. So where you move your stop losses away, I move my profit targets away. That's what we do different at the end of the day. And that's what's so important about trading. How do we get these levels though? How do we get these little levels that we put in onto these charts, you know, all the time, this support and resistance and so on? Where do we actually get them from, and how do we put them in? You know, what is this? This is a demand level, right? This I get off the 4 hour, but I get my main levels off the day charts. Now, how do I do that? What I do is I take this to the day chart and then I put it on a line chart. Why do I put it on a line chart? Now, my main reasoning put it on a line chart is because you see that those are closing prices. Those are all closing prices, and I'm looking for the closing prices on my resistance levels where it hits, where it ends. So that's what I'm looking for. I'm looking for those closing prices. I'm not looking for highs and lows of the day, which you get off the candles. Now, let me just have a look here if why this is so low. Oh yes, because of that, it was further back. But there is another support level a little bit higher up here now. So this has moved a little bit. So what I would say is you need to move that up a little bit higher because your support is now actually there, right? So we've moved that up. We know that our support is now in this level, in this area here. Why do we draw rectangles in the first place? Because there's no such thing as an exact line where your price is going to get to and bounce off of. It doesn't work like that. Price doesn't look for a line and bounce off it. As I said to you guys, what's behind the squiggly lines is human beings. What they've done is they've placed orders in this area. There's no way that they're all going to place the order at exactly the same price, 130.3558. They're not going to do that. Some will have 1.355, some will have 1.350, and so on and so on and so on. Prices will differ in this area. So what you're looking for is the orders in that general area to take your price and show you which way to go. Then we put it back to the candles. Now this is what you've got on the day chart. But we're not trading on the day chart. We are trading on the 4-hour chart. We're using the day chart to get our levels. When we go back to the 4-hour chart, what we find is this demand level here, which has been taken out. So that's gone. So that is actually no longer valid. So you don't need to have this in here anymore. anymore, you can remove it. That's gone. That was an old bit of work that we did, and we determined that there was a demand level there. It worked, it paid, and it went up. And now we're waiting for it to hit this resistance on the 4 hour. You see there's a resistance on the 4 hour. Watch out for these guys, because they do count. Just because we've got daily levels doesn't mean we don't have 4 hour levels. And that 4 hour level might send your price back down again. So keep an eye on that. Watch out for that. So that might be a short from there. So now what you're looking at, you've got your main support, you've got your main resistance, and you can look for levels inside this 4 hour. What else are we looking for inside this 4 hour? Fair value gaps. Are there any fair value gaps that you can see that might be useful to you? No, I don't see anything right now. There might be a tiny one there, but that's worthless to me. So no real fair value gaps, no real supply levels. This would have been a supply level, but it's broken that. There might be a bit of a supply there, but that's more like a resistance. So you just look on your 4 hour chart if there's any levels there that you can actually use as well. This is effectively trading without indicators. There's no volume indicator on here. There's no moving averages, no stochastics, no RSIs, nothing to confuse you, because I always say there's two opposing views to every single trade, and your view and somebody else's view. And let me tell you something, guys, if you add all those indicators on there, you're going to have opposing views on your own trade, and you're not going to be able to trade. You're not going to want to trade because you're not going to be sure which way the market's going to take you, and it's going to confuse the living hell out of you. So don't play around with that. Just keep it simple, keep it basic. Just look for the levels and just play off the levels. There are 3 ways we trade in the market. I always tell everybody this. The one way, the first way, and the main way is to trade with the trend and to trade in the structure. So up, down, up, down, up, down, up, down. And when it gets to a point and it starts ranging, that's what we call a flag pattern. So if you're trading in the structure, you'll be going bullish, you'll be trading long on every single trade on this product. When it starts ranging like this, we call it a bit of a flag pattern. That will normally resolve to the same direction that it was going in, so it'll resolve to the upside in this case. That's the second way we trade. We trade off a range. We look at which way the range will probably resolve to, and we try to take the trades along that way. But sometimes, like the R50, it's just simply in a range. It stays in that range, and you can just keep trading it off the bottom and off the top, off the bottom, off the top. Probably one of the better ways of trading. But then we also have break of structure. What is break of structure? US oil, Brent might be a good example of this. Brent was, for example, if you take it to the day chart, it should actually show it. Yes, it does. It actually shows it. Okay, look at this. You've got this long downtrend. I mean, a mean downtrend. It's been in structure for a long time. So you've been short, short, short all the way down. And then it hits a point where it says, well, I'm not doing this anymore. I've decided I'm now going to go long. And it starts going long. How do you know when to get into that long? Because that's the third way we trade. We trade when it's overbought and oversold, not with little lines and squiggly lines at the bottom and stochastics and things like that. Just look at the chart, man. You can see this thing's been going down for 100 years. It's oversold. It's at a price level that you've seen 100 times. It's just so low. This thing's oversold. So it wants to turn around and go back. But you can't just trade it based on that, because that's a supermarket mentality. You're thinking it's cheap, but it might not be. It might still get cheaper. The only way to tell that you can turn around and go back the other way is when it breaks structure. How do you know when it's broken structure? Some people look to the left here at the last structure point to see where it breaks that structure. I just simply draw the trend line in. Trend line needs to catch 3 points. If it catches 3 points, that's your trend, that's your structure. It's in that structure. It's broken through that structure and it's heading up in the other direction. So that tells me the structure's broken and you can start looking for long trades. And then you add in something like a supply level, demand level, anything like that, fair value gaps, whatever you can find. Support resistance. Support resistance is the biggest one that we trade. So if we find ourselves coming off a support or heading to a resistance, we can trade. The trends are a friend. We like trading in the trends. When it breaks out of a trend, the obvious trade is to wait for this to come back, retest that line, and then continue on to the upside, and it will resolve to the upside. So that's what you're looking for as well, that sort of trade. So those are the 3 ways that you're going to trade in the markets. Basically, your trend, your range, and your overbought and oversold. There's no need to be trading any other way. There's no need to be looking for fancy fandangled little strange systems. to trade in the market. It's much simpler than you actually believe. So you've seen the charts, you've seen that part of the system, but can you apply it? Are you able to apply a system and become a profitable trader? Are you able to look at a chart and understand what it's all about? Now, the first thing you have to understand about charts, and the most important thing that you have to understand about charts, is the following. That is, the squiggly lines and the candles or whatever you're trading with are real human beings in the market. There's real human beings behind that lot. And what you've got to do is you've got to learn how to read the charts like you would read a book, and see the charts as people trading, as money in the markets. There's orders waiting in the markets. There's people that have placed orders. There's people that are trading and they're taking the markets long or taking the markets short. And the sooner you see that there's real people behind those squiggly lines, the sooner that you will understand that trading is actually a 50-50 game. That 50% of the time when you take a trade, you've got a chance of winning, and 50% of the time when you take a trade, you've got a chance of losing. And the reason for that, guys, is the market is made up of buyers and sellers. The market is made up of people. And you can take any system and you can put it in front of two people, and one will tell you that's a buy and the other one will tell you it's a sell. Because there's two opposing views to every single trade, just about. Because everyone's got their system, everyone's got their strategy, everyone's got their edge. Every single one in the market, guess what? They believe they're gonna win. Because do you know any traders that get into trading because they think they're gonna lose? Because they believe that they're gonna lose in the stock market? Do you think anybody gets into trading to lose? Is there anyone you know out there that will do that? Because I don't know anyone like that. As far as I know, everyone gets into trading so that they can win in the stock market, so that they can make a profit in the stock market. So all I say to you guys is just remember, trading is a 50-50 game. If you flip a coin 10 times, 5 times in all probability it'll land on tails, and 5 times in all probability it'll land on heads. So how do you make a profit if this is the case with the stock market? How am I going to make money in the stock market? And how many times have I answered that question? It's so simple. All you got to do is have a simple strategy and a simple business plan. First, you got to get your psychology right. You got to get over the fear. You got to get over the fear of losing, because guess what? You're going to take losses. Guess what? You're going to lose trades, because that's the market. That's just how it works. But what you have to do, let's say you have a $100,000 account and you've got this account and you want to trade it. You decide each and every trade that you're going to take a $1,000 stop loss. Invalidation period placement. So an invalidation point. The reason for a stop loss is when the trade gets to that price, the trade is no longer valid. You wouldn't walk up to that trade and say, do you know what? I'm going to take this trade now because it looks invalid, right? Because that's what the whole point is. You want to take a trade because you think your system is going to be a winner. You think you've got a system that's going to win 9 trades out of 10, don't you? You obviously believe that. So why would you take a trade if it's invalid? So the whole point of the stop loss and the strategy, this is your business plan, guys. You don't have to write this down. You just have to remember it. Simple. You don't have to write a whole bunch of points down. Just do this. Just say, I'm not going to risk more than $1,000 any one of my trades. I'm only going to risk $1,000. Doesn't matter what time frame you're on, how you're trading, what you're trading, $1,000 risk. Don't go, oh, I trade the US 500 better than I trade the Euro US dollar, so I'm going to risk $2,000 on the US 500 and I'm going to risk $1,000 on the Euro US dollar. Because then you're going to lose. Then the strategy is not going to work for you. It's going to fail. What you have to do is keep the risk the same. Now you go into the trades, and if you take a loss on the $1,000, you take the loss and you walk away. You do not try and move the stop loss away and try and make the loss bigger, or add to the loss, or hedge the loss, or any of those silly things that cause you to blow your account. You take the $1,000 loss, you bow your head and you walk away. You took a loss. You've got to get around the fear. You've got to understand that you are going to take a loss from time to time. But when it goes into profit, on every single one of those trades that you took $1,000 stop loss on, you want to be trying to make $2,000 or more. I don't say that you have to be strict on the rules. I don't say that if you see you've made a profit at 1,500 and it looks like that thing's going to turn around and go against you, I don't say no, just hold on to it till 2,000 because, that's the rule. No, obviously you want to take that profit. What I say to you is you want to try as much as possible to make more on your wins and lose less on your losses. In many cases with the stop loss, when it goes into loss, I'll take my loss much earlier. I'll even take my loss at $200 because I can see this trade is no longer valid. I'm not going to stay with it. But with my profits, I'll try and hold on as long as possible. But I will move the second part of the business plan is I will move my stop loss up when I'm in profit. I'll move it to break even, then I'll move it into profits and so on. And sometimes it'll come back, take the stop loss out in a reasonable profit or in no profit. The trade is now free anyway. I didn't lose anything, but I also didn't make a great profit, which brings me to the point where I always tell you guys that a win rate is meaningless, because this is why your win rate is meaningless. You'll have a whole mishmash of little wins, and you'll have a whole mishmash of little or larger losses, and that will always be in your portfolio. And then you'll look at your win rate and say, I've got this amazing win rate, but how much profit have you made? What's your profitability? Because that's the important part. The win rate is meaningless. You know, I've had so many traders come to me and say, I've got this win rate, I've got an 80% win rate, and they hate me when I say I don't care. I honestly don't care if you've got an 80% win rate. It's meaningless to me. It doesn't mean you're a good trader. It just means you've got an 80% win rate. It means you've got a good system. That's all it means. It doesn't mean anything else. I can get a 100% win rate if I take $10 profits on every $1,000 trade. Every time it moves into profit, quickly click that button and make a profit. I win every trade, but I won't have any profit because when I make a $1,000 loss, I'm going to look stupid because the loss is going to be so big. Get it? Are you getting this? Does this make sense to you now? You've got to make more on your wins, guys. You've got to let your wins run, and you've got to add to them where you can. If you see that it's going well into profit and it looks like another new trade has developed, if I came into the door today and I saw this trade was going to be successful, I would take that trade. Then you double your trade, you add to your trade, whatever the case, where you can, you add to the trade. It looks really good. Trade's looking bad, then obviously you're going to move on. But the idea is to make more profit and less loss. That's what the strategy is all about. You've got to get over the fear of, if your trade goes into profit, quickly grabbing the small profits as well, because that's where a lot of the money falls away. You jump in, and you're like, oh, quickly, I got $200 profit, let me grab that and run. And then the trade carries on going without you, and you left all that money on the table. So try and follow your wins and dump the losses as quickly as possible. Guys, do come back for the live video tomorrow. Come and enjoy it. We're going to sit together as a community and chat again, and it's the Euro session. Don't forget, we're going to have a bit of fun, and I love getting together with the community. It's always great. Guys, watch the last videos, enjoy them, learn how to become a profitable trader. Don't be afraid to ask questions. I do get back to most questions. Some of them I can only answer on the videos, guys, because it's really complicated to answer them on a comment. And if you want to know more about the 50/50, please watch the videos or wait for me to respond in a video, because I can't be commenting on the 50/50 principle on comments all the time because it's just too long and obviously difficult to get over and difficult for people to understand. Thanks for watching, guys. Till the next video. Cheers, ciao, and bye.